All right, guys. So let us start now with the fundamentals chapter. Okay. This is not a chapter which you'll find in your ICI material. It is just for your understanding. Certain terms I have included for your better understanding of the other chapters, of the upcoming chapters that we shall be doing. Okay. So let us quickly start with the fundamentals part. All right. Now, what all things are we going to cover here? Number one, this is auditing subject, right? So let me just make you go through the process of audit, which of course you had covered at the intermediate level also. So we'll learn what is auditing and then what are the stages and steps of auditing. Very quick, we'll be quick here. Okay. All right. So what is auditing, guys? In simple words, audit process refers to sequence of activities performed in the formulation of audit opinion on the financial statements. So up until now, at the intermediate level, I told you that generally when we talk about auditing, it has something to do with financial statements, right? So we express an opinion on the financial statements, that whether the financial statements are giving true and fair view or not. Okay, I hope you're able to recall true and fair view. All right. So how does this auditing happen? How does the audit take place? So again, guys, we have certain points here. Let us just quickly go through it. That number one, guys, the appointment of auditor will happen, right? Now, some of you uh, might be able to recall that who does the appointment. Can anyone answer this? Who does the appointment of auditor? Yes. Generally, who does the appointment of auditors? Shareholders, right? Absolutely. So if it is a company, generally the shareholders would appoint the auditor. Okay. Yeah, in case of first auditors, it might be the board of directors. I hope you are able to recall this, right? So the appointment of auditor is done, and generally, guys, if it is a company, the provisions of Companies Act has to be complied with. So appointment of auditor would be done. Once the appointment of auditor is done, what is the next thing? Let's say Sujita has been appointed as the auditor of the company. So what is Sujita now going to do? So second point is determination of objective and scope of audit. So the auditor now needs to decide, needs to find out what is the objective, what is the scope of audit. Now, when I say objective, if it is a company audit, if I'm doing the audit of the financials of a company, of course, my objective is to express an opinion on the financial statements, whether the financial statements are giving true and fair view or not. Okay. And when I say, guys, scope of audit, it simply means, in very layman's terms, if I tell you, scope of audit simply means what all things would be included in the audit. I mean, what all things you have to check in the audit, whether you have to check, you have to see the internal controls, whether you have to include this also in the audit. So basically, what all things are included in your audit, so you have to know the scope of audit. Okay. Now, very simply, if I put, guys, in very simple terms, if I put uh, when I talk about scope of audit, okay, for different audits, it would be different, right? Now, in very layman's terms, again, if you are doing a statutory audit of a company, so your area of coverage perhaps would be more on the lines of or the requirements of Companies Act. You as an auditor would see that various provisions of Companies Act have been complied with or not. However, let's say if it is a tax audit, you are doing a tax audit, okay, under section 44 AB of the Income Tax Act, then probably the things which you are going to include in your audit would be different. It would be more from the perspective of Income Tax Act. You will be seeing various provisions of TDS, you will be seeing all those aspects, right? So the scope of audit would be different from different types of audit, right? I hope this is clear to all of you, right? So first, appointment of auditors is done. Then we have you need to be clear about the objective and scope of audit. All right. Now, once all these things are done, the basics, let's start with the audit now. Okay, as an auditor, so you have to obtain an understanding of the client and their environment, including the internal controls. You have to have an understanding of the client, their environment, and in the internal controls. Now, what is internal control and all, we'll cover it up. Okay, basics, you already know. We have all the points here mentioned, like what is internal control, we'll be covering it up. But at the moment, I'm just making you walk through the steps very quickly. And of course, all of you must be knowing this in your articleship, from your articleship as well. All right. So, guys, I can't start an audit without the knowledge of, my client. I at least need to know what industry is from, whether he is into manufacturing or he is into trading or he is into service. Accordingly, the books of accounts, everything I would be checking, right? So I need to know my client, I need to know the entity, whether he is into exports, whether he is you know what kind of industry is into, whether he's into pharma business, whether he's into aviation business. Because again, if he's into pharma business, if he's let's say an NBFC, the laws would be different, right? So I need to know the entity and its environment, including the internal controls. Now, very simply, if I put, guys, internal controls are processes which the management puts in, okay, so that the errors, the chances of fraud, the chances of errors in the financial statement is very less, right? In very layman's terms, I've tried and to put what internal controls mean. Okay, now as an auditor, again, as an auditor, we need to check the internal controls, because if the internal controls of a company are good, okay, I want all of you to answer this again, very basic thing from the intermediate level. If the internal controls of a company are good, the chances of mistakes or misstatements in the financial statement would be high or low? Will be low. Yes, would be low. If internal controls are good, the chances of misstatements would be low. So as an auditor, we need to check those things also. Let's say, guys, I'm doing an audit of a company and the internal controls are really not adequate, they're not working properly. So in that case, okay, there is a storm outside. Okay, so in that case, if the internal controls are not good, the extent of my checking, I mean, I'll have to check a lot of things in the financial statement, right? So as an auditor, always remember, guys, that when we try to understand the entity, when we try to understand its environment, we also try to obtain an understanding of their internal controls, not with a perspective to give an opinion on internal controls, but basically, if you have knowledge of internal controls, it will help you in determining how much work you have to do in the audit. Okay, layman, in very layman's term, I'm trying to explain it to you. Is it clear to everyone? Again, I'm asking you this, guys. If internal controls of a company are adequate, you will have to perhaps put in less efforts while you are doing the audit. But if, let's say, the internal controls are not that great, as an auditor, you will resort to more checking, you'll have to see a lot of things, and the efforts that is going to be required in the audit would be very high. Okay, I hope this is clear to everyone. Yes, Rahul, Vimla, Mahadevan, yes, Divya. Okay, all right, now, guys, so what I've done here is I try to understand the client. Okay, I try to obtain an understanding of their internal controls, and when I do this, it will give me an idea about the chances of misstatements in the financial statement, how much mistakes might be there in the financial statements. Generally, what did I tell you? If internal controls are good, the chance of misstatements would be low. So the next step that you're going to do is assess the risk of material misstatement. Now, what is risk of material misstatement and all? I'm assuming that you are able to recall, but even if you're not able to recall, don't worry, guys, just give me 5 more minutes. We'll be discussing all these terms in detail, yeah, in detail, but yeah, in a very quick manner. Okay, so I'll help you to brush up all the concepts, don't worry at all. But yeah, so you will now assess the risk of material misstatement. So, guys, can I put it in this way? Okay, yeah, so this one. Okay, so can I put it in this way, guys, that let's say let me write it like this: strength of internal control. Okay, and let me write risk of material misstatement here. Okay, so if the strength of internal control, let's say it is adequate, what do you think? Will the risk of material misstatement be high or low?
Low.
Low. Okay, and let's say if the strength of internal controls, if they are not adequate, they are not very great, let's say inadequate. You check the internal controls and they are not proper, they are not operating effectively, let's say in basic layman's terms they are inadequate. So in that case, perhaps it might so happen that the chances of misstatements, risk of material misstatement is what? Risk of material misstatement is nothing but probability that the financial statements will contain misstatements. This is ROMMS, risk of material misstatement. So probably if the internal controls are not very great, the risk of material misstatement would be high. Okay, now just one more point. So guys, what do you think? What would be the impact of this on your audit procedure? Okay, I can write it in this way: extent of audit procedure. So you only tell me, guys, if internal controls are adequate and risk of material misstatement is low, you feel that the chances of misstatements in the financial statements would be very low. So as an auditor, what will you do here? Will you end up doing more checking, or less checking would also suffice?
Less is okay.
Less is okay. So can I say your extent of audit process, even if you do it less of audit process would also be able to give you an effective and efficient audit. Let's say you'll be able to do an effective and efficient audit. But on the other hand, if internal controls are inadequate, the chances of misstatements are high. Probably you'll have to work more as an auditor, you'll have to check more things as a auditor. Okay, again guys, don't go by the literal language. It is, I did not use any technical language here. It is just for you to understand the concept, the the linkage between internal controls, the risk of material misstatement, and the audit procedures. Okay, all right. So you are going to assess the risk of material misstatement, and then you are going to plan the audit. Okay, so understand guys, till point number 5 as such we have not yet started applying any audit procedures. It's just when you come to point number 5, we do the planning. Now again, we know that okay, this is the risk to the material misstatements, this is the risk of material misstatement in the financial statement. Let's say it is at this level, so accordingly our planning would be done. If we feel that okay, the risk of material misstatement in this particular organization is pretty less, our planning would be done accordingly, right? So once you assess the risk of material misstatement, accordingly the planning would be done. Now in very simple terms guys, what is it that we decide in the planning? We decide the start time, the end time, how much time is it going to tentatively take to complete the audit, what manpower would be required to complete the audit. All this is done. But you can't just do it randomly, right? I can't, okay, I have been allotted an audit and I just can't randomly, oh, I think your audit would be completed in like 5 days of time. I can't say it blindly, right? I have to assess their financials, I have to see how good their controls are, I have to assess the risk of material misstatement. Accordingly I'll be able to plan, right? So only in point number 5 we are able to do the planning part. Once the audit planning is done, now comes the main field work, wherein we go to the client's place and when we do the audit procedures, we perform the different procedures, guys. Okay. Now, when I say we perform the audit procedure, what does it mean? Now, again, very concept pertaining to your inter level, guys. Again, if we say that we have to perform audit procedures, so we pick up the items of financial statements, right, and we perform audit procedures on each of them. So what does it mean? So for example, if I take okay, let's again take land and building. There's land and building appearing in the financial statements of the client. So now we have to apply audit procedures on it. Okay, let's say they have mentioned that the land and building is of 5 crores. Okay, so as an auditor we need to check whether it is correct or not. So what all things perhaps we'll be doing? Okay, so number one, let's say we'll see whether the land and building actually exists. This is also an audit procedure. So when I say we'll see that the land and building actually exists, or perhaps we'll just do a physical verification, we'll just observe okay that there is a building, yes, you know uh, uh, which is actually being reflected in the financial statement, it actually exists. So maybe we'll check on the existence part first, but only checking the building. Okay, perhaps might not be sufficient. Client might show you any random building and they'll tell you, oh, this is the building that is there in the land and building in the financial statements. Will you agree to it? Of course, no. So only by doing a physical verification or checking the existence of building perhaps might not be enough. So what will you do? Oh, is this your building? Show me the documents. Show me the ownership documents, right? So perhaps you would now apply procedure to check the ownership, and maybe you will check the, let's say, title deed. You will ask for the documents. You'll ask for the, sale deed. Okay, so you'll see the title deeds, and then when you see that, oh yeah, the company is in the name, the building is in the name of this company. Okay, then perhaps you'll have an assurance, okay, yeah, the building belongs to the company. Okay, and then again, so let's say, guys, now how will you check whether the building is of 5 crore rupees? So as an auditor, we might not be an expert that we see the building, we see the area, and then we say, oh yeah, it might be around 5 crores. So perhaps for the valuation part, I would again apply procedure. It is, beyond my forte to comment on the valuation part. So I'll ask them, okay, do you have a valuation report? Do you have a valuation report from some expert that, yeah, the building is of 5 crore rupees? Okay, or when you constructed the building, let's say they are showing it at cost, when you constructed the building, so there needs to be a valuation report that, okay, this was the cost of land, this was the cost of construction, and accordingly it is coming at 5 crore rupees. So I need to check the valuation report. So what I have done as an auditor here, I have applied procedures. Guys, please understand, I have applied procedures, and when I apply procedures, what do I get? I have obtained, upon applying procedures, what do I get? I get evidence. So if you see here, guys, I applied physical verification is a procedure, P1. Okay, and when I applied physical verification, what did I get? I got an evidence with respect to existence of building. So I can say this is my evidence one. Yeah, the building exists. Okay, then I applied one procedure. I wanted to get evidence with respect to ownership. So I asked for the title deed. I asked for the legal documents. So I applied again a procedure, and I obtained another evidence, and then I obtained basically another evidence with respect to valuation, right? So always remember, again, very fundamental basic thing, that upon application of audit procedures, what is it that we get? We get evidence, right? And you have been studying this from the intermediate level almost in every chapter, guys. As an auditor, what type of audit evidence, what kind of audited evidence rather, would you as an auditor try to obtain? Do you remember the word, two words, sufficient, and what is the other word? Yes, guys. Sufficient and appropriate audit evidence. Okay, you have to obtain sufficient and appropriate audit evidence. Now, when I say sufficient and appropriate, again, let's just quickly understand these two words. What does it mean? Here, how many evidences have I obtained, guys? I've obtained three evidence. Okay, now imagine, as an auditor, you just obtained this evidence. They made you see the building, and then you agreed, okay, this is your building, this must be around 5 crore rupees. Is the evidence that you obtained here sufficient? Maybe not. Maybe not. So sufficiency, the word sufficiency basically refers to the quantum, or let's say quantity. How many evidences have you obtained? So in my example, we have obtained three evidence. Okay, and when I say appropriate, appropriate basically is with respect to quality of audit evidence. Okay, now for example, guys, let's say title deed. Company is not showing you the original papers, original ownership papers. Upon asking, they only provide you with photocopies. So photocopies might not be very reliable, guys. It is always better that we look for the originals. So even after insisting, let's say as an auditor, they only give you photocopies, perhaps you would not be very much satisfied, right? Why? Because it is not a appropriate audit evidence. Photocopies, the quality is, of course, not the paper quality and all, but the quality of evidence is not as high as original, right? So as an auditor, guys, when we apply procedures, we need to ensure that we obtain both sufficient and appropriate audit evidence. Okay, we'll discuss more about this in SA 500, but for the timing, I'm assuming you're fine with it. Okay, so what has happened, guys? We plan, and then we perform audit procedures. And upon performing audit procedures, what happens? We obtain sufficient and appropriate audit evidence. Right. So for each of the items of financial statement, material items, we'll be obtaining sufficient and appropriate audit evidence. Then what is going to happen, guys? Based on each evidences that we obtain, we have obtained evidence 1, evidence 2, evidence 3. So based on each evidences that we obtain, we shall be drawing conclusions about those particular item. So we'll draw conclusion. So here I'll draw conclusion about land and building, that okay, land and building is giving a true and fair view. So similarly, let's say we have inventory. So I'll apply procedure, I'll get evidence, and then I'll draw conclusion about it. So similarly, we'll get, conclusions about other items. So when we draw conclusions about all the items, and then from these conclusions, okay, you know my flow went wrong. I mean, I should have mentioned conclusions here. Let's say we have conclusions. Okay, so from these conclusions, ultimately, guys, in the entire, about the entire financial statements, we give what? Opinion. So we apply procedures, we get evidences, and then we draw conclusions, and then collectively, we give an opinion. So after the word of conclusion, if you see, we draw conclusions. What exactly do? We express an opinion. And where is this opinion expressed, guys? In the, so all of you know this, very basic. And yeah, so with this, guys, the entire audit process is over, right from appointment till the time you issue your audit report. Let us just quickly go through it. So once the first is the auditor is appointed, then the auditor, he or she needs to understand the objective and scope of audit. After that, he is going to understand the entity, its environment, the internal controls, and accordingly is going to assess the risk of material misstatement. Once he is done assessing the risk of material misstatement, he would be in a position to plan the audit. He would be able to understand tentatively how many days would be required, what kind of manpower, what kind of procedures do we have to apply. All these things he would be able to plan. And then once the planning is done, we'll do the field work, we'll start the field work, we'll go to the client's place perhaps and start doing the audit, start applying the audit procedures. Upon applying the audit procedures, we would be getting evidence, and as an auditor, I need to ensure that the evidence that I obtained is sufficient and appropriate. Okay, upon after obtaining evidence, we would draw conclusions on the different items of the financial statements, and based on these conclusions, we would express opinion on the financial statements, whether the financial statements are giving true and fair view or. Okay, so very simple. This is what, guys, audit process is all about. Okay, now this process only, the words that we came across here, let's say misstatement, opinion, we are just going to discuss them quickly in the next concept. I have just mentioned the heading as audit terminology. So all the terminologies that will be used throughout the subject, let us just quickly go through them again. Guys, I'll not be dealing with these words. I'll not be teaching you what is auditing, what is opinion, in as much as detail as we do at the intermediate level, because of course you are at the final level now and you have fair knowledge about it. Okay, all right, so what is auditing, guys? Let's just quickly go through the definition. It is a independent examination of financial information of any entity. All of you know this. The entity can be any entity. It can be a profit making entity. It can be a non-profit making entity. And when I say profit making, it can be a company, it can be LLP, it can be a partnership firm, it can be a sole proprietorship, it can be a trust, it can be a society, it can be a association of person. Okay, so it can be any entity. Okay, uh, irrespective of its size or legal form I've already discussed. It can be small company, big company, any. Okay, any uh, organization. But guys, why do we even do an audit? With a when such an examination is conducted with a view to express an opinion thereon means you express an opinion on the financial statements. Okay, and do you remember, guys, what kind of opinion do you express? You express whether the financial statements are giving true and fair view or not. That's it. Fine. Okay, now the opinion which the auditor gives is whether the financial statements are giving true and fair view or. Okay, now what is true and fair also we shall be covering here. True and fair. Okay, now one very important thing for you to understand is, guys, when we do audit, I'm talking about audit. Okay, so in audit generally, we only express an opinion. We never certify things. Okay. There is a difference between giving an opinion and giving a certificate. Now, some of you might be working in office, so you know, okay, generally, when we do an audit, we give an opinion. It's not that a CA cannot give a certificate, we can give a certificate as well. But in auditing, guys, because we don't check everything, okay, and there might be some issues in the financial statement, some things which management has hidden as on purpose, they have hid from us and all. So we generally, and there are certain inherent limitations of audit because of which we can't give a certificate. We always give a opinion. Now there is a difference. Opinion means one's point of view. Okay, my opinion, your opinion might be different. Like, very layman's example, generally I give it at the intermediate level also. So if two friends, let's say, watch a movie, guys, one might find the movie very good, the other might not find it good enough or interesting enough. He might, find the movie very boring and waste of money. So here, each one of the guys have a different opinion, right? And this is how audit happens. Audit is basically, expression of opinion. It's not a certificate. Now, when I say certificate, okay, certificate is something which is where there is no judgment, where whatever is written is 100% correct. Okay, like for example, if I tell you, there's a birth certificate of a child now, which specifies the time of birth, the place of birth, so that is a certificate. There's no doubt about it that the kid was not born. Okay, certificate establishes a fact. There is no second thought about it. Like, you have your 10th mark sheet, you have your intermediate certificate as well, now mark sheet. So these are certificates. There is no doubt now that you did not pass, right? So there is a difference between certificate and opinion. Like, going back to the example of the movie which I took, okay, once you watch the movie, and whether you like it or not, it's a part of, let's say, opinion. But when the movie starts, the censor board of India issues a certificate, right? Whether the movie is for everyone, it's a universal movie, or let's say it's only for adults, so they'll mark it as A. So this is a certificate. There is no two thought, there's no second thought about it, that okay, if this movie is can be watched by kids or only by adults, that is a certificate, right? I hope you're clear on this. So, guys, opinion means one's point of view, and certificate means establishing a given fact. So if you have a certificate, there is no second uh, thought about it, there's no doubt about it. Whatever is written is 100% correct. But opinion is just one's point of view. So remember, don't get confused. It's not that CAs can't issue certificate. We issue certificates, but that's a different thing. But in audit, because of inherent limitations of audit, you have heard about it, right, in your intermediate days. So because of certain limitations of audit, because we don't check 100% of things, because management might conceal a lot of things, we generally give an opinion on the financial statements when we do the audit. Okay. All right. Yes. Now, guys, when I talk about opinion, okay, you express the opinion where? You express the opinion in the audit report. Okay. Yeah, I told there's some issue of the transformer going. Now there was a blast and it's raining as well. Yeah. Am I audible, guys?
Yes, sir, you are
Yeah.
audible.
Yeah. Yeah. Okay. All right. All right. So, yeah. So, opinion is expressed in the audit report. Okay. Now, the question is, with respect to opinion, we are going to cover a few more points. Guys, what kind of opinion? Let's say you are doing the audit of financial statements and everything is looks proper and all. So, you would probably state whether the financial statements give true and fair view. Now, what does true and fair view mean? Very simple words, guys. True means, that the financial statements are factually correct. Okay, and fair means, fair is more with respect to the word, let's say, presentation. Okay, so I can say the information is fairly presented, true and fair. Now, for example, very layman's example again, uh, the company that I'm auditing, let's say they bought certain furniture and fixtures worth rupees 5 lakhs, right? So this should come properly in the financial statements, right? Let's say on the asset sides, furniture and fixture, and the amount should be 5 lakhs. So when this is done, I would say that the financial statements are giving true and fair. Okay, but let's say, guys, they show the financial, they show the furniture and fixtures in the asset size, but the amount is 3 lakhs. That means they have not, you know, put the correct facts. Okay, so I cannot say here now that the financial statements are giving true and fair view. Okay, one more example. Let's say in the asset size they bought certain furniture. They are showing it as okay. Now, rather than showing, okay, let me put it in this way. Rather than showing the furniture in the asset side as 5 lakh, what they did is, they did not, they charge it to revenue. The amount of 5 lakhs is correct, but they showed it in the P&L as an expense. So now the presentation is not fair here, is not proper. So again, I would say that the financial statement, or let's say this item of furniture, is not giving true and fair view. So please remember, guys, true, the word true and fair, both are different. True is with respect to the factual correctness, and fair is more with respect to the presentation. Okay. All right. All right. Now, again, guys, we have few more words. Very quickly, we are going to cover them up. Okay. Uh, Now, there are two words, material misstatement, and in the entire subject of audit, n number of times you'll come across this word, that financial statements are materially misstated. As an auditor, we need to check whether the financial statements are, materially misstated or not. So let's understand the two words. Let's understand material and misstatements separately. Okay. Now, guys, you have to understand this, that in a financial statement, you know when I say the word material means, in very layman's sense, something which is of significance, something which might uh, you know uh, influence the decision makers of the users of the financial statement. Okay. Now, when I say users of the financial statement, who are the users, guys? Let's say there is a company X Limited. Who will be the users of the financial statement?
Shareholders,
Only shareholders, Sri Priya, only shareholders?
directors,
Yeah, there are so many users. There might be so many users, right? Employee may be a user. The management themselves may be the users of the financial statement of X Limited. Bankers, creditors. Okay. Then we have government for taxation aspect. The shareholders, of course. So these are the users of financial statement. So when I say the word material, okay, what is material? Basically, material is anything. Okay, the misstatement of which, any item can be material, but if it is misstated, if it is wrongly entered in the financial statement, it can influence the decision based on those financial statements. It may influence the decision makers of the users. Then that item would be called as material. Let's say, guys, in very simple terms, there is a company whose turnover is 500 crores. Okay, there's a company whose turnover is 500 crores, and some expense, let's say in the financial statements, of rupees 50, they have not correctly put. Okay, probably you would not be much bothered, because if the company has a turnover of 500 crores, a mistake of rupees 50 might not change the decision maker making of the users. A prospective investor who was about to invest in the company would still invest, because even if the amount is misstated by rupees 50, it is not very significant. Okay, but let's say if it is a 500 crore company, and the sales figure the sales figure have been uh, misstated. Let's say around 35 crore sale figure has been misstated. Okay, so let's say or let's say around 100 crore sale figure is misstated. This is almost 25% of the total sales, right? So this is something now very important. This might affect the user's decision. Probably now, if it is misstated, a prospective investor might not be willing to invest in the shares of the company. So what is material, guys? Material is basically anything, the misstatement of which might influence the decisions taken on the basis of those financial statements. So it would influence the decision taken by the. So this is basically something we call it as material. In very layman's terms, guys, again, material is anything which is going to be something which is significant. Okay. All right. Now, before I further take up the concept of material, I would again first take up the concept of misstatement, and then we'll go back to the concept of material. So what is misstatement? Very simple, guys. In again, in layman's terms, any item or information, if it is wrongly stated in the financial statement, it is a mistake. Okay, so furniture and fixture, instead of 5 crores or 5 lakhs, they have put it as 3 lakhs. Is it a misstatement? Yes. Why? Because the amount is incorrect. So furniture and fixture, let's say they have made entries in the books of 5 lakhs. The figure is correct, but they charge it to revenue rather than capitalizing it. And is it a misstatement? The answer is yes. So guys, understand, anything which is not as per the auditing accounting standards, anything which is not as per, let's say, if the company is following Ind AS and they are not complying with Ind AS requirements, then it is a misstatement. If a company is making financials as per IFRS and they are not following any of the let's say rules of IFRS, if they are not complying with the requirements of IFRS, again it's a misstatement. Okay, so misstatement doesn't mean that there has to be a mistake. If company omits something which was supposed to be there in the financial statement, now for example, they forgot to pass entries with respect to furniture and fixture of 5 lakhs at all. They did not pass any entry, it was totally omitted from the books of accounts. So will it be a misstatement? Okay, and it's not just, guys, about making entries. Let's say there is a transaction. Okay, uh, certain commission was given to a to the director's son. Commission was given to director's son, and the amount is 3 lakh rupees. They have shown it properly, no issues about it, it's a company. However, they forgot to disclose the related party transactions as per AS 18. They did not give the disclosure. Again, will it be a misstatement? Yes, even though they have accounted for it, it is not going to impact the P&L, but they did not do the required disclosure as per AS 18. So will it be a misstatement? The answer is yes. Right? So in very simple terms, if you are not, if a particular accounting standard or Ind AS is applicable and then you don't comply with it, it's a misstatement. Okay, so what is misstatement? Let's quickly go through it. When an item or information is wrongly stated in the financial statement, it is referred to as misstatement. Technically, misstatement is what? This is the technical definition: any difference between what is required as per applicable FRF, financial reporting framework. So if your applicable FRF is AS, you have to comply with AS 18. If it is Ind AS, you have to comply with requirements of Ind AS. Okay, so technically, misstatement includes any difference between what is required by applicable FRF and what is included or omitted from the financial statements. So what management has prepared and what is required as per FRF, if there is a difference between the two, will be called as misstatement. Simple, right? Now, guys, the question arises, misstatements can either be because of error or fraud. You all know this. Fraud is basically what, guys? If intentionally the management or, the misstatements are done intentionally, it is fraud. If the misstatement is unintentional, it is error. Okay. So this is, guys, all about uh, misstatement. But now the question is, in auditing, we'll always come across the word material misstatements. Please remember, guys, as an auditor, we shall not be able to check all the misstatements in the financial statement. There might be so many transactions, right? So as an auditor, I have mentioned a point here also. Since it is not practical for the auditors to detect all the misstatements, it will not be possible. So as an auditor, we should only focus on what? The focus would be on detecting material misstatements only. So you have to see what things are significant in the financial statement, things which might influence the decision makers making of the users, and accordingly determine whether this item is material or. So our focus area when we do the audit should be on material misstatements. Okay. So in CA Final, I'll later upcoming chapters, I'll teach you the concept of risk-based audit also, right? So we'll see how much risk is there, and accordingly we do the audit. Okay, so this is basically material. Now, guys, one very important thing is that you need to understand this. When I talk about material, okay, an item can be material either because of the magnitude, or it could be material because of the nature as well. Now, in the example which I gave here, that sales was 500 crores and 100 crores sales has been misstated. Okay. So, of course, this amount is very big. This is why does it become material? The sales of 100 crores becomes material because it is a big amount. Okay. So, materiality basically depends on two things, guys. Okay. It says can be material either by magnitude or due to the nature of the item. Again, in very simple terms, if I say, let's make it small. The total of balance sheet is 10 lakhs. Okay. And they have stock worth rupees 8 lakhs. Total of balance sheet is only 10 lakhs and they have stock worth 8 lakhs, almost 80%. And there is a misstatement here. Okay. So will it be considered as material? Yes or no?
Yes, sir.
Yes. What is the reason? Why do you think it is going to be material? On the basis of what? On the basis of magnitude, because it is almost 80% of your total assets, and then there is a misstatement in this, of course. So it becomes material because of the nature, because of the magnitude, 80%, let's say, of the total assets. Okay. However, guys, not all transactions would be considered material only because of magnitude. Some transactions might be small, but still, they might be considered material. For example, let's say, again, this 10 lakh rupee company only I'm taking. Okay. And commission to director was given, or let's say there is a director's remuneration. Okay. The profit was not much and he only took a humble, let's say, only generous 1000 rupees as director's remuneration. Okay. Good. And in PNL it was properly shown, 1000 rupees as director's remuneration. However, director's remuneration, guys, it's a related party transaction. They did not disclose it in the related party transactions as required by, let's say, applicable FRF. So now, even though the amount is small, but this is something which the shareholder should be knowing, because it's a related party transaction. So then it becomes what? It becomes we call it as material. Why? Because of the nature. Okay. It's not the amount of transaction always, but because of the nature of transaction, you have to understand it will be material. Okay. In intermediate level, guys, I always give this example which I practically see, or let's say face. Let's say this watch, okay, of mine. uh, let's say just assuming it's 1 lakh rupee watch, let's say. Now, 1 lakh is a big amount. Okay. So if this is a 1 lakh rupee watch, I would always, keep it properly. I would only wear it occasionally, let's say. And when I'm not wearing it, I would properly put it in the almirah. It's not going to be, lying anywhere in the open, or some, just kept it, on the bed. No, I would properly take care of it, right? Why? Because it's valuable. It's expensive. Let's say it's a 1 lakh rupee watch for me. Okay. However, guys, it's why am I taking so much care of it, or why am I bothered so much about this watch? Because let's say the price is 1 lakh rupee. However, there's one more watch, let's say the current price of it, which is 300 rupees only, 300 rupees, but that watch, has been given to me by my grandfather. Let's say my grandfather gave it to my father gave it to me, and then the current value of it is only 300 rupees. But still, I need to take care of that watch. I would be very much taking care of that watch. Why? Because I have an emotional connection with that watch. That watch carries legacy, let's say. Okay. So for me, that watch is also material, even though it is of 300 rupees. So always remember, this was just an analogy, guys. Always remember that materiality, as an auditor, you would not determine something to be material always because it's high in value or because of the magnitude. Things could be material because of the nature of their transaction also. Okay. All right. I hope this is clear for you. Okay, guys. So yeah, we have covered what is material, what is misstatement. I told you that misstatements may happen either because of fraud, or it may happen because of okay. Now, again, objective and scope of audit. These were the first two things that you need to do in the audit. Objective and scope. All of you know this. Objective is basically what to express an opinion of the financial statements, and basically, what is scope, guys? Scope means what all things you have to do in the audit. What all areas will you be covering in the audit? Range of activities. Okay. All right. Now, guys, let's come to few more points. Okay, very important. Now, internal controls. All of you know this. Number one, these are processes. Okay, who puts them in place? It is put in by the management of the company. The management would ensure that there are internal controls. Okay. Now, what do these internal controls do? Basically, guys, they are processes which management puts in to ensure that the misstatements in the financial statements are less. These controls ensure that the misstatements are prevented, or let's say if they were not able to prevent it, they are detected on a timely basis. Okay, now probably, let me just give you certain examples. Like for okay, in a company that I audit, any payment which is in excess of 50,000 rupees, okay, cannot be just paid by the accountant, or let's say the finance department. It has to be approved first by the a level manager. So it's a control, so that no fictitious payments, or let's say no unwanted payments are given to a vendor. Okay, only when the transaction of above 50,000 is approved by the some top level management, then only the money can transfer, or go from the company's bank account to his bank account. So it's an internal control. Okay, they don't want any misutilization of company's funds. They don't want it to be given to some random person. He did not even send goods and we are making payment to him. No. So management needs to put in the control. So this is one simple control. Okay. Again, guys, let's say you go, the employees of the company are required to change their passwords often. Let's say it's a policy that every 15 days they'll have to change their password. It's a mandatory requirement. Again, this is a control. Why? It's a so that the systems, the data inside the systems, they are secured. The chances of them getting leaked, or if somebody hacks into, if let's say Sri Priya is an employee and I happen to know her password, I might get into the account and get access to the data. It should not happen. So employees are required to change the password. You are a customer of the bank. You are also required to change the passwords, from time to time. So it's a control. So who has put in the control? Your bank. Every bank's control would be different. I have an account in Union Bank. They want me to change my transaction password every 3 months. HDFC Bank, on the other hand, wants me to change my password every 1 month, let's say. So every bank would have different internal control in place, right? So the again, guys, if I go with very layman's terms, internal controls are processes. Okay, let's read the point. These are processes which is put in by whom? The management of the company, to prevent, detect and timely correct material misstatements which happen in the financial statements. Please remember, guys, always remember, management is responsible for, this is a line which we'll be using in a lot of standards. Management is responsible for the design, implementation and maintenance of the system of, okay, it is not the auditor. What is the duty of auditor, guys, with respect to internal controls? Can someone explain it? What is the responsibility of auditor with respect to internal controls? Yes, please tell me. Okay, I'll give you options. I want you to participate. Is the auditor responsible in helping the management implement controls? Please answer, guys. Is he responsible for the design, implementation, maintenance of internal control? Yes says no. All right. Okay, great. Okay, so what is the responsibility of auditor with respect to internal control? Okay, please answer, guys. Will the auditor be checking the internal controls? Yes or no? Just answer yes or no.
Yes, sir. The main objective should be evaluating the internal control.
Sorry, Jagan. Can you please repeat?
The main role would be to evaluate the internal control.
Okay. So we will check the internal controls, and the main objective would be to see whether the internal controls are in place, whether they are operating effectively or not. And guys, again, why do we check internal controls as an auditor? To assess the risk of material misstatement. Because I told you earlier, if internal controls are adequate, the chance of misstatements would be less. If internal controls are not adequate, the risk of material misstatement would be very high, right? Now, just remember this, guys. we generally, I'm talking generally, right? We check the internal controls with respect to, with this objective in mind. We never comment on the internal controls. We don't give opinion on the internal controls unless specifically required by law. We only check the internal controls to assess the risk of material misstatements and consequently determine our nature, timing, and extent of audit procedures. How much procedures do we have to apply? Okay. All right. So now, because we have checked internal controls, you will be in a position to understand the risk of material misstatement. Again, guys, these are very basic things, but I have seen a lot of CA final students have confusion. They are not very clear with respect to terms. This is risk of material misstatement, and earlier we had covered only misstatement and material word, separately. Now, risk of material misstatement only means what? Please understand. This is basically chance or probability of mistakes in financial statement. When I say risk of material misstatement, it is basically probability. It is basically a chance of misstatements in the financial statement. What is the chance of misstatement in the financial statement? So the risk of material misstatement refers to the risk that financial statements are materially misstatement. Risk, or you can say the chance, the probability that the financial statements are materially misstated and they are not presenting true and okay. So again, guys, I told you this. Let's recall. If internal controls are not that great, what would be the impact on risk of material misstatement? If internal will be higher. On the other hand, if internal controls are good, generally the risk of material misstatement might be low. Okay, done. Guys, now once you're done with understanding or assess, not understanding, let's say assessing the risk of material misstatement, what is the next thing that we are going to do? We are going to do the audit planning. This is nothing, guys, but I'm just again making you walk through the stages. So once we are done assessing the risk of material misstatement, we are going to do the planning, then apply procedure, then obtain evidence. So these are the words that we are just quickly going to cover: planning, procedure, evidence, conclusion, and then the different types of opinion. Okay, so what are audit procedures, guys? Audit procedures can be the process, techniques, methods that auditors basically perform to obtain audit evidence. So what is audit procedure? Process, techniques, methods which the auditor performs to obtain audit evidence. Okay. And guys, always remember this line. Okay. A favorite line, almost every page of audit you'll find that the auditor should determine the nature, the timing, and extent of audit procedures to obtain evidence which is basically sufficient and appropriate. So auditor will determine, it is basically the judgment of auditors. Okay, he will determine whether what kind of procedures to be applied, when to apply an audit procedure, and how much checking he has to do, how he has to apply that procedure in how many items, let's say. So nature, timing, and extent of audit procedures the auditor will determine, till the time he is able to obtain sufficient and appropriate audit evidence. You already know the meaning of sufficient and appropriate. Nature means, guys, the type of audit procedure. Type, okay. Let's say you wanted yeah, type of audit procedure, whether you are inspecting something or whether you are observing something. I mean, let's say physical verification we do. Okay, physical verification is observation. Then they gave you the title deeds of land and building, so you are observing the document. Now let's say there is a depreciation in the financial statement, so you recalculate the depreciation to see whether it is mathematically correct or not. So these are different types of procedures, right? We'll learn more about it when we revise, when we go through SA 500. Then timing refers to when the audit procedures have to be performed, and extent means the quantity of a specific audit procedure to be performed. Okay, let's say we are inspecting certain vouchers, so how many number of vouchers do we have to check? What is the extent basically? So it is based on auditor's judgment, basically the nature, timing, and extent of audit procedure. Okay, anyways, guys, so upon application of audit procedure, what is it that we get? Audit evidence. Okay, so evidence obtained by auditor to substantiate any financial information by applying audit procedure. The auditor should obtain sufficient and appropriate audit evidence. Okay, and I told you this, guys, sufficient means what? Quantity, and appropriateness is basically quality. Okay, and on the basis of these audit evidences, what is it that the auditor will basically do? He's going to draw conclusions. So conclusions drawn by the auditor on the basis of sufficient and appropriate audit evidence, and on the basis of audit conclusion, he is going to give opinion on the financial statement. Now, guys, you all know this. What are the four different types of opinion which an auditor can give on the financial statement? Guys, we have four different types of opinion. Number one is unqualified opinion. Second is qualified. Third is disclaimer. And fourth is adverse. Okay. So unqualified opinion means what? All of you are very much familiar with it. Guys, if let's say each and every item of the financial statement, it's giving true and fair view, will give an unqualified opinion, will give a clean report. Okay, so auditor expresses an unqualified audit opinion when in his opinion and based on the information provided to him, audit evidence obtained, he considers that the financial statement of an entity give a true and fair view. So in simple word, guys, remember, you are going to give an unqualified opinion when all the items of the financial statement give true and fair view. You check land and building, it's giving true and fair view. You checked inventory, it is as per the applicable IFRS. You did the physical verification, everything is proper. You know, you check the current assets, it's fine. You check the liabilities, P&L, every item is okay. So you give a unqualified opinion. Now, the second one is qualified opinion. Qualified opinion means that almost, except for one or two items in the financial statement. Let's say, guys, you were checking the financial statements of a company, and then you were checking the inventory. You did a physical verification also, it was proper, the counting was okay. But however, what the company has done is the company valued their inventory, let's say, on the basis of LIFO, which is not allowed as per the applicable FRF. They did the valuation, let's say, I'm talking in terms of not Ind AS but AS. Okay, so either you do it at FIFO or weighted average, but they ended up doing it on LIFO basis. Okay, now, and other than this, all items, the current assets, the fixed assets, the property, plant, equipment, the liabilities part, the P&L part, everything is proper. So here, you can't say that the financial statement is not giving true and fair view. It would not be fair on our part, right? So what we do is we'll write something like this: except for the item of inventory, the financial statements overall is giving true and fair view. So what we have added here, exception, we have added a qualification, we have added a remark here that except for the item of inventory. So this except is nothing but, we call it as a qualification, we call it as a remark, or not remark, a reservation. So we have, added a qualification, hence it is called as qualified opinion. So when the auditor is not satisfied on some matters relating to financial statements, but satisfied with all other matters, he issues a qualified opinion. Okay, simple. All right. Then now let's come up to first adverse opinion. Let's discuss about adverse opinion. Okay. So guys, if everything is okay, we give unqualified. If one or two items, you are not satisfied, you give a qualified. If all items in the financial statement you feel is misstated, it's not properly accounted for, you would give an adverse opinion. You would straight away say that the financial statements are not giving true and fair view. So it says, when an auditor expresses an opinion that financial statements are not at all giving true and fair view. Done? Okay, so you checked land and building, they were not able to show you the original papers. You were checking the investments, they did not provide you with the statement of investments, they did not give you the demat account statement, they are not sure about the valuation, everything is haywire, it's chaotic probably. Then it's not just one or two items, almost every item of the financials. Depreciation, they did not charge it accurately, the method of depreciation was not proper. In that case, you are going to give an adverse opinion that the financial statements are not at all giving true and fair view. Okay, all right. Now we have one more type of opinion which is called as disclaimer of opinion, guys. Like, what is disclaimer of opinion? That sometimes it so happens that you are unable to obtain sufficient and appropriate audit evidence. You went to the audit, but you were not able to obtain sufficient and appropriate audit evidence. In that case, imagine, it wouldn't be wise, right, to say that financials are giving true and fair view. And at the same time, it won't be justifiable if you say that financial statements are not able to give true and fair view at all. Rather, the truth is that you were not able to obtain sufficient and appropriate audit evidence. In that case, you give a disclaimer of opinion. Disclaimer simply means you are not giving any opinion because of certain issues. Now, for example, let's say you went to a client's place to do the audit, and you ask them for the books of accounts. But then, very recently, the books of accounts of the company were seized by the income tax department. They conducted a raid on our company, and the documents were seized. So in that case, when I go and do the audit, the company was not able to give me the books of accounts. In that case, will I be able to do the audit? There is no. So I'll have to disclaim my opinion, right? So we have in all, guys, four types of opinion: unqualified opinion, qualified, adverse, and disclaimer. I hope you are clear on this. Okay. Now, in the fundamentals part, we have what we have covered, guys. The main concept that we covered was only the audit process. And while I was discussing the audit process, my intention was to just brush up the words which we'll be using in, the throughout the subject of auditing, like misstatement, like the different types of opinion. I would have not waited for the chapter number 7 audit report to make, or let's say SA 705, to make you understand what is qualified opinion, what is adverse opinion, etc. So that I just gave you a brief, and we are going to discuss each of the words in detail again when we come up to the relevant chapters. Like for example, we have an entire 300 series, 315, when we are going to discuss about risk of material misstatement, audit planning, audit evidence. Audit planning we are going to cover in 300s. Okay, audit procedures, evidence we are going to learn in 500 series. Then reporting part we are going to cover in 700 series. So the most of the standards, like from chapter 1 to chapter 7, will revolve around this process only. Okay, so that is why I thought, though it is a very intermediate level topic, but then I thought let's quickly go through it, so that it's easier for you when we start with the chapters. Okay. All right. So first part in the fundamentals is done. And since I told you guys, we'll be starting our session. I mean, we'll be covering the different standards first. What I have done again in the fundamentals part, there are two things which I have given. Some commonly used audit terms in the name of audit terminology. And then the second part, if you see, we have some quality control and engagement standards basic. So before I dive into the standards, again, we'll be learning few basics, that what are the different types of standards, some again few words pertaining to those standards before we start with our standard. Okay. All right.